Hi guys, it's Dimitri from Rush Hour Real Estate podcast channel, and I really like that you all following our channel, commenting and sharing with those who you think might benefit from it. And today we have a special guest, really special, because there are so many comments from you guys about the mortgages, financial options in UAE for residents, for non-residents. And today we have a guru in this field, Mr. Fahad from Hateem Mortgages. He's a guru of mortgages and specializing in off-plan, in ready properties, in many different options. So we will cover it today. Fahad, thank you so much for coming to our channel.
Thank you so much, Dimitri, for inviting me. It's always a pleasure to meet you. So let me introduce myself.
Yes, please.
I'm Fahad, and I've been here in Dubai for almost 35 years. In fact, I was 3 years old when my parents moved to Dubai. And all my life I've lived here, and I have been in the banking industry in mortgages for good 15 years. And in this 15 years, I've only done mortgages. I've worked for banks like HSBC, Standard Chartered, Dubai Islamic Bank, and now start of this year, I have opened my own independent mortgage consultancy that's called Hateem Mortgage.
Okay, that's great. And how would you come with the idea to open your own company? Because I think this is great. You're not like a person who works for any of the companies and promoting any corporations or any other entities. You are here to tell us how first you started your own business, why, and why mortgages. So what's your story? Yeah?
Sure. Basically, why I started mortgage consultancy, my own company. Basically, as I said, I've worked for the banking industry for almost 15 years, and I have assisted more than 1,000 clients to get a mortgage here in the UAE, and that was in a value of around 1.5 billion dirham.
1,000 customers?
More than 1,000
More
customers.
than 1,000
Yes.
customers. And how much in total of mortgage?
It is 1.5 billion dirham while I was working.
1.5 billion. Wow.
Yeah. So, I was basically always working for a bank and giving only solution to clients for that specific bank. And then over a period of time, I realized that I was losing my clients to competitors, because when you work for a bank, you work for one company, you cannot sell any other product. You have to sell that pricing, that product. So I thought that's the need of the market, that you need somebody experienced who know the market, who has been there, who knows the process to make things easier and simpler. So I thought of getting into my own business.
It was difficult to take decision from the paychecks, from the secured paychecks to your own business? I know, because I also am the owner of the company, and you are the owner of the company. That's amazing. But tell me, it was scary. How did you take the leap?
So actually, I wanted to take that decision from last 2-3 years. But when you are working for a company and when you're working for such great institutions, and you're comfortably getting your paycheck at the end of the month, so you're happy, you have comfortable life, you're making decent money. But it was difficult. But basically, my family, my wife, actually, they pushed me. They said, yes, you have to get into mortgages. You have to start into your own business, and we know that you can do that. And I thought, why not? And now here I am. I'm actually enjoying it. From day one, when I started this company, honestly, I was not expecting the response I received from my own clients. And they started referring clients here and there. And from day one, I started making money. Money means, of course, it was better than what I was working for a bank. So from day one, it was great. It's a great experience, and I would suggest anyone who wants to do big, they should get into their own business.
Guys, that's really crazy good advice for everybody. If you have an idea to start your own business, just go for it. Go for it. It will be difficult. It will be exhausted, but it will be amazing adventure. And at the end of the story, definitely you will become rich, independent, and free to choose and live life you want. Okay? Super, really. Next question, of course, why people should choose you as a broker comparing to any other bank? Why they don't just simply go to the bank and say, look, guys, I need a mortgage. Why they should choose you?
So, I mean, if you want to buy a property here or anywhere in the world, the easiest way to buy a property is you buy on cash. You have the cash, you like the property, you go to the transfer office, pay the cash, and get the property ownership. That's the easiest way. The other option is you get into a mortgage. So now you have an option in mortgages. Either you go directly to the bank, or you use a mortgage consultant. So if you go to directly to a bank, you might go to one or two banks, or maybe three banks. And those banks will, as I said earlier, that they'll offer you only one product, one pricing, their own procedure, policies. They might not give you the solution that fits your profile, that fits the best pricing. So when you work with a mortgage consultant, they have a number of options. So like we work with banks, which are 14 plus banks. We work with them. So we understand clients' requirement, we understand client's profile, and based on that, out of those 14, 15 banks, we narrow it down to top 3 banks. And we tell them that this is the top 3 banks, and we give our recommendation. We don't force them to please pick this or choose this specific bank. We give them our recommendation and we leave the rest to the client, whether they want to choose us, want to take the best of the options, or they want to go directly to a bank. It's up to the client. The other advantage of a client using a mortgage consultant is if you know somebody who's really experienced, has done this from past 15 years, now it's in their DNA now, to understand this stressful paperwork. So a good mortgage consultant from the start, even if you have not finalized the property even if you're thinking, you can talk to them from that till you become the owner of a property. That mortgage consultant is there. And a good mortgage consultant is there even after you have purchased the property, you've got a mortgage. He's there for you, for any guidance or assistance. And the other most important thing is the mortgage consultant don't charge you any fees.
That's why I was just thinking to ask you a question. Many people will think about also brokerage of my company, real estate, and yours as well, saying they are usually questioning like, they most likely charging. I know that there are some companies which are charging people because they don't know. But is your company charging anyone for anything? Tell us about it.
So 99% of the time, we don't charge any fees to the client unless the case is very complicated, you need a lot of work to be done. We tell them upfront that we will be charging you a certain fees, but 99% we don't charge any fees. So it's a free cost. There is no cost in it. So it's a no-brainer for a client not to take a consultancy from somebody who has been there in the industry for so long.
It's amazing because you can provide them different options from all the banks, major banks, with different rates, different conditions, different terms, everything, and you just checking all these banks with the criteria from the client and then giving them the best option they can choose. I think it's best.
Yeah, and also, I mean, you need to also get a good mortgage consultant. So I'll give you an example of a client. I mean, he applied through, one of the guy in bank, and he was waiting for more than 2 weeks to just get a pre-approval.
That's exactly what happens with many clients. They're saying, Dimitri, what should we do? Because many people buying properties with mortgages, of course, and they're asking, what should we do? Because we already waiting 2-3 weeks from one bank to reply us, then another bank to reply us.
Yeah.
And that's the answer.
Yeah. And what we did basically, we understood the client profile, and within 2 days, we got him a pre-approval, and he was able to secure a property for which he was waiting for to get him, because you can't sign the form.
2 days?
Yeah, within 2 days.
Wow.
So again, there are cases where it can take 10-15 days, but if your profile is good and mainly in case of salaried, you're a resident, then you can just get a pre-approval in 2 days. So we got that done for a client, and he was extremely satisfied, and he got the property which he wanted to sign, and that client was super happy, and he referred us like n number of clients, and that's helping us to promote our business. Yeah.
Amazing. So guys, within 2 days, you will get the approval from the bank for your mortgages. Can you imagine? Amazing. So if you need anything from our advisor, please contact us below. There will be all contact details, yeah? So when you can always contact us and ask any questions you want, yeah? And it's absolutely free, remember it. So it's free, nobody's charging you anything. Okay, so we jump to, there are different properties and different scheme of financial, for example, for off-plan, for secondary, for residents, for non-residents. So let's start with the people who are applying for, or they asking for mortgages for being non-residents.
Yeah.
So there is quite category of people from Europe, from America, from Australia, from different locations. They're asking, guys, what can we do? What's the solution for them?
Yeah, so that's a good question because it's a very common question we also come across. So 25% of our business comes from non-resident. And it has become very easy for a non-resident to buy property here. I mean, even if you're not here in the UAE, you're outside, you can buy a property in the UAE. And also for a mortgage, initial pre-approval, you can get it. Sometimes it's much easier than a resident client to
Really?
get because banks have made it more simple. There are few banks, they just ask for few documents like your ID copies, your 3 months personal bank statement, your bureau of home country. In some cases, they don't even ask for your home country bureau and utility bill. So based on that, you just get a pre-approval and we check your eligibility through a bank and then you get a pre-approval. So it's that easy. And as a non-resident, you can get 60 to 65% of the property value. So just with 35% down payment, you can buy a property. So let's say if you're buying a property of $1 million dirham, 650,000 dirham is a bank financing you, 350,000 is what you need to put a down payment.
And is this for example, we will also cover for non-residents now, the off-plan and secondary.
Yeah.
Is there any difference for non-residents for off-plan or secondary? And if off-plan in general can be financed by banks as a mortgage?
So when it comes to non-resident, let me first explain you what exactly non-resident client is for a bank perspective. Yeah. So any client whose income is based outside UAE.
Even if you have residency here, like ID, for example.
Even if you have a Emirates ID or if you have a golden visa you have got because of just opening a trade license, or maybe you have just invested 2 million dirham on a property, you can get a golden visa. So it's not based on the visa status, it is based on the income from where you're getting. So if your income is generated outside UAE, that's a non-resident client for the bank. And they can only buy ready property here in the UAE. So if you have bought a property through a developer, like most of the transactions are happening, like those non-resident are buying from a developer with a payment plan. So which is like 50-50 or 70-30, you pay 70% during the construction and the last payment.
Exactly.
So when you have a building completion certificate, you can approach the bank and you can get a finance for the rest of 30% when the property is ready. So that's non-resident can do, but it cannot be for the off-plan property. So if you want to get a finance on the off-plan, you need to be a resident.
You mean financial resident, kind of?
Yeah, you need to be a financial resident.
Exactly.
Your income should be here in the UAE. And the important criteria when you want to get a finance on the off-plan is the property should reach 50% construction. You should have 50% paid from your side. And then there are 2 or 3 banks offering finance, the remaining 50% on a mortgage.
Even property is not finished?
Even the property is not finished.
Really?
Correct. But that's open for a few selected developers, like major master developer, to name few like Emar, Nakhil, Demak, Dubai Properties.
But the door is open.
The door is open.
I didn't know this, really.
Yeah.
I know that there was an idea from the government to initiate this. That works.
Yes.
Wow.
Yes. And that's currently for the resident whose income is generated in the UAE. But I think maybe by early next year, we might see that window opening for a non-resident. We are optimistic on that, but we'll let you know once that opens.
Yeah, one more question. My client, actually today he asked me a question before this podcast. He is from Germany.
Yeah.
And he asked me, Dimitri, I have a properties in Dubai. I have ID, but I live in Germany most of the time. However, I have income from rentals here. Let's say quite good rentals. He has like 10 properties. So his income is quite good, but from properties here, but he's, let's say, and he doesn't have any other incomes. So what kind of situation? Can he get a mortgage? Or what will be the proofs for banks? What is the most criteria? Because he asked me exactly today, Dimitri, tell me, I will be coming in December and want to apply to mortgage. And tell me, what should I do?
So, I mean, I'm exactly doing the same case for a client who is retired now. He has got multiple properties and he's generating rental income from them.
Exactly.
So, based on the rental income, I mean, the rental income should be close to $500,000.
Very nice, exactly like this. Yes,
higher.
exactly.
So, but the property should be in the UAE. The rental should be there in the UAE. It should be supported with the documents. You should have an ijari, supported with bank credit on the rental incomes. Based on that, yes, you can get around 50% of the property value. So where you can use those property, collateral that, and take equity out to buy another property, or you can use the rental income to prove the bank that this is your income, and with this income you will be buying another property, you'll add to your portfolio, and you can get a mortgage.
So there are two options available. So he can also release the equity from existing apartments, properties, and also get the mortgages. So there are quite a lot of instruments for investors.
Yeah, this instrument, not a lot of people know in the market, but I am sure with this podcast they can understand that if you have got a residence visa here, you have multiple properties here, you have rental income, then yes, you can get
Guys, listen very carefully, investors, stay focused, yeah? So Fahad is the guru in this financing of the properties for mortgages, for equity release. And remember, if you're non-resident or resident, there are so many options. He can guide you really. This is amazing. Okay, so we jump to the residents now. So what's the major difference between residents and non-residents, and what kind of benefits they have in comparison to the non-residents? What kind of options more?
So when it comes to resident, it's like, as I said, you will be treated as a resident if you are residing here in the country. You have got income generated in the country. So if you have salary, you can be either salaried, self-employed, or you have a rental income. That's a third category. So you can get a maximum loan amount when it comes to the resident. So if you are a resident of UAE, you're an expat here, you can get up to 80% of the property value.
80%?
Yes, 80% with just 20% down payment. That's for a property value within 5 million dirham, and that's for the first mortgage. And whether you're salaried or self-employed, that's the maximum loan you can get. That's the resident. But for a non-resident, they are still doing it. It's good news, but it's capped at 65% of the property value. That's for the non-resident.
Okay. Is the bank also, many people asking, is the bank covering 4% DLZ, for example? Is the bank covering any other fees which might be coming from the bank evaluating the property? Is this what is mortgage amount covering, or just directly the value of the property itself?
Yeah, so banks are only covering the 80% of the purchase value. If it comes to the land apartment fees, or there is a real estate commissions or any other fees, that is not covered by the bank. So you need to arrange this from your own savings. So the down payment can be only from your own savings, but the land apartment fees cannot be covered in the mortgage. It cannot be added to the mortgage, but you can take a separate personal loan just to cover those ancillary fees. Not for the down payment, but for the ancillary fees. But you need to be eligible. Your income should allow you to take a personal loan. And that personal loan is only for, maximum of 4 years. And you should be eligible to get a personal loan based on your income.
Do you deal with that?
So I don't do it myself, but I do have contacts where I advise clients, okay, you can use that bank to get a personal
So you can still support clients with this question?
Yes, with
because
advice,
many people, as you know, they're looking for some still maybe support in covering of the fees or some other things like that,
Yeah.
That's very important. Okay, and we coming to the documentation process, because people definitely would like to be prepared when they will be thinking about buying the property. So they definitely will ask, is it like hell to submit and collect all the documents, or it's quite simple? Tell us more about for non-resident and residents, or if it's same, that's fine.
Yeah, so the documents are simple. It's not complicated. These days you have Al Ittihad Credit Bureau here in the UAE. So it's easier for a bank to assess your profile. If you're a resident here, you have some facilities here in the bank. They can know about your profile. But in terms of documentation, it's simple. If you're a salaried, you just need to give your ID copy, salary letter, 3 months bank statement. These are few basic documents you need to provide to a bank to just get an assessment on your eligibility if you're salaried. For a resident. If you are self-employed, then you need to have trade license, company bank statements. If you need a little higher loan amount, then the bank may ask for an audit financials. For self-employed, it's also simple. It's not that complicated. People think that I'm self-employed, I might not get a loan, but it's also simple when it comes to self-employed. So there is something called low doc, where you don't need to give your audit financials of the company, just based on your 6 months bank statement, personal and company, based on ID copy, trade license, you can apply for a mortgage.
My case, let's say,
Yeah.
like my company is 2.5 years old.
Yeah.
So I'm thinking, okay, maybe I can take a loan, the mortgage. So it's possible.
Yeah, of course it's possible.
Yeah.
And since you have passed 2 years, we need to, of course, see your 6 months bank statement, personal as well
Many
as
banks
company.
told me that I have to wait 2 years before I start this process. That's
Yeah.
correct. So if you're a company owner, then even you have really healthy cash flow on your accounts, both personal and company, banks prefer to wait 2 years and see if the business survives, and then you can submit documents, yeah?
Correct. There are banks who can even lend at 1 year, but the standard is between 2 to 3 years. So if you have crossed 2 years and you have got funds coming into your personal account from the company as a form of salary, you can use that to get a mortgage, even if you're a self-employed. So yeah, it's possible, and we can talk on that as well, on how to get the mortgage done for you as well. Yeah.
Okay. Another questions coming from customers. They're like a couple or two different people, friends, and they're saying, look, I will take a loan, but the other person doesn't. So how it works if there's joint property ownership? So how the mortgage works in this case? The two friends or a couple wants to purchase the property, being 50-50 owners of one property. How the bank considers, what's the solution?
Yeah. So if you're buying on cash, it's simple. You can buy jointly with anyone, any
Yeah,
friend or
that's
anyone
simple.
you know. You can just add them to the property. You can buy 2, 3 people, 4 people, whoever wants to become a part of the ownership. But when it comes to the mortgage, you can add your spouse as a joint owner. You can add your parents, your siblings as part of the mortgage application. But you can't add friends. Banks are not comfortable in financing 2 friends getting a mortgage.
So 2 friends, if me and you, let's say, we want to buy a property, so they will not approve the mortgage for one of us. Doesn't matter how big income is it, or
How big income?
doesn't matter, because there is like collateral or something, kind of a risk, so I don't know what.
Yeah, so banks are not comfortable because there is a more chance of a dispute happening between friends. So they're not just comfortable in financing friends now. Yeah.
Okay, in case if they, the couple, let's say, a family, purchased the property, and one person is responsible for paying this property, and yes, he pays, and then something happens, like he was fired, or unfortunately he died, or something illness happened to him. What happens in these cases? Because that's also a common question from people. They want to understand what's the process here in Dubai, what they will face, or what they should plan to. What kind of more details you can give us about this situation?
When anyone buys a property using a mortgage, it's a big commitment. I mean, you don't buy property every day. You buy maybe one time in a lifetime, or maybe 2, 3, or maximum 4 times. That's the majority of us when we buy a property. So especially when you're taking a mortgage, you're exposing yourself to such a high loan amount. Of course, there is a property which is there, but what bank do is, most of the bank, they makes it mandatory for you to have a life insurance linked with it.
Is the bank providing it, or are you paying to the bank as a part of mortgage fees? What's the usual process here?
Yeah, so bank basically have list of approved insurance companies. They will give you an option that you want to opt for which insurance. Typically, banks gives like 3 to 4 3 insurance companies, which one you want to choose. So you can pick one of those and assign that. And most of the banks have made it mandatory that when you take a mortgage, you need to have a life insurance linked with it. There are few banks, they do have an option that if you don't feel that you don't need an insurance, you can still get a mortgage without the life insurance. But as an experienced mortgage consultant, I would never advise our clients to take such a high loan amount and risk it to your family. So the insurance company, God forbid if something happens to the life of a person, so you need to, the insurance company basically pays
Insurance will cover
the outstanding, and your family gets a property, so they're not liable to pay the loan to claim the property.
Exactly.
So in fact, you're leaving an asset for the family. That's banks have made it mandatory for when taking a mortgage. And the other question was, somebody becomes permanently totally disabled, so they're not able to work because of some permanent illness. So in the insurance, you have got an option of adding a permanent total disability. Something happens to you, you're not able to work because you're the sole breadwinner, and who pays such amount? So it's the insurance company who pays the outstanding, and you get the property. Yeah. And the other part was, what if I lose the job? So there are a lot of insurance options available. The banks, I mean, when you take a mortgage, the bank is not offering that option, but you can take a separate insurance for an unemployment option. Yeah, so in case you get fired, so you have that insurance supporting you in case you become
I know
unemployed.
when I was working as well and I had the mortgage, that the banks at that time were giving me, I remember, a kind of a period like a break or vacation of installments, something. Is that the case possible as well? In some cases, the banks here in Dubai are still trying to be comfortable for clients and getting into situation. And okay, if it's proved, of course, not everybody can just say, I lost the job, please forgive me and just let me. But if you really are struggling, and there are many families here who are in transition from one job to another one, and it's difficult to cover all the schooling fees, come on, everything, food, rents, and also plus maybe your installment to the banks or whatever, lots of expenses here. So is there any solution from the bank itself to support you?
Yes, see, what happens if you come across in life, you never know, I mean, it's not stable. I mean, you can come across a situation where you lost a job, or you're not in a position, or you were at a 50,000 salary or 100,000 salary, you lost it and you have got such a big installment. So the best option is, I mean, you find out a way to pay from your own savings. But if you can't, you approach a bank, tell your situation, make them understand that this is what your situation is, and based on the bank assessment, they'll give you a holiday period. They might give you maybe you can just pay a profit for a certain period of time, or we can give you a payment holiday when your circumstances changes, your installment can come to normal. But yes, banks are there. They would definitely listen. And I remember during COVID, when clients were struggling, and I remember when I used to work for the banks, I mean, most of them, I think every bank, they gave that option, because some customer, their salary were freeze, they stopped, they lost their jobs.
Exactly.
So banks were, there to support those clients. They gave them payment holidays, and when the situation became normal, and then the installment were started again. Yeah, but banks do listen, they do provide, but you have to talk to the bank and get their consent to.
Guys, this is another great advice. Yeah, so don't hide, don't sit and think what will happen. Just always talk, be open, be really, frankly speaking, to the parties involved in your deal, and try to get understanding from the banks. Yeah, from Fahad, for example, advisor. Even if you're in this situation, you can always call him, get in touch, and he will provide you with details, support, completely free, just helping you to understand what is the situation and what you can do, how to approach bank, what kind of even documentation for this case. And also what we're coming to the next thing, in case there is a refinancing options as well. So in case if client is not happy with his bank, let's say this situation or another one, or rates are increased or anything, and he found some different interest rates which are lower, what is the terms of switching from one bank to another bank? So is it possible?
Yeah. So we get, this is a very common questions being asked by the clients. So the first choice you should make is go back to your bank where your mortgage is. Talk to them. Tell them that you're not happy about it. If you don't like the rates, let's say you're being charged 5% now and the market is charging 4%. You're not happy about it. You talk to the bank. Tell them that this is what is being offered in the market. I want to negotiate on my rate. Or if you're not liking about the service, or you don't like the system of the banking which you are banking with, so you can, first talk to them, give them the chance. In most of the cases, bank would want to retain good clients.
So the bank, even existing bank, can always review the rates, conditions.
Subject to their approval.
They will find really, you show them that, and you're a good client, of course, yeah, it depends. But you saying, look, guys, I was paying 2-3 years, but there are competitions here, and I found there are several banks offering better conditions. I can save 2-3% maybe. Oh, not 2-3%, but at least something. I can save
0.5 to 1%.
Yeah, let's say some
difference
percentage of you can save, and accumulating to annual payments, that's a lot. And of course, you can cover maybe on these expenses some other kids' needs or your vacation, etc. So bank can review and offer you something better.
Yeah, so they can do it, but again, if you're not happy even after the review, you still made your mind that you don't want to remain with that specific bank, then you can always switch your mortgage from one lender to another lender by just paying an early settlement fees of 10,000 dirham to the existing
This
bank.
is common condition, 10,000.
This is a standard condition.
It's central bank condition.
It's a central bank rule. Okay. So any bank you want to switch from, you just pay 10,500 to that bank, and you can switch from that bank to the another lender. So that's option is available. Yeah.
Do you help people to do this?
Yes. So although I don't encourage clients to do that, but again, if any clients wants to get a switch of a mortgage, definitely I'm an expert on that, and I can get you a best deal from the market.
Why you not recommend to do this?
So see, why I don't recommend this, basically when you move it's not only about the 10,000 dirham fees, it's also about other fees associated with it, like mortgage registration fees you have to pay. You have to pay again a trustee office, the properties in Dubai, or if it's in other Emirates.
That's important, because you have to make also the trustees to register your mortgage on the other bank, yeah.
Plus, you have to pay sometimes valuation fees of the new bank.
Exactly.
You have to. There are some other fees like processing fees, valuation. The hassle of going through one bank to another bank. It's simple, but again, because of the cost involved, you might need 1 or 2 years to reach the break even. So I don't advise people to do that. But again, if they want to do that, if the difference is big, let's say the difference is 1%, then we can work it out, or it makes financial sense.
If people want to negotiate with the existing bank, would they? One of the ways to use you as an advisor to negotiate it. Is it possible?
Advise
them first, at least.
So, I can advise them, I can review them on what's your current rate, whether it really makes financial sense. If the percentage is only 0.25, it might not make a financial sense, because you might need 1 or 2, 3 years, 4 years to reach a break even. But I can definitely review, and then I can guide them. Yes, it makes financial sense, and these are the options for you. You can look at these options, and we can switch on.
Again, this is the answer again for many of our followers and anyone who's watching this channel or this video. So if you want any advice, even not to take the mortgage, guys, contact Fahad, and he will definitely guide you through the process, just give you a sample scenario, or evaluate your existing mortgage or potentials on switching banks there and here. So that's amazing, really. So what we will check now also, the many clients, they buying commercial property. So is there anything you can help our customers who are buying to go for the mortgage or some financial solution for commercial property?
Yes, so now, commercial properties, when you say commercial property, you can have shops, you can have offices, you can have warehouses.
Some of them may be hotels, let's say, of rooms or something.
Hotel service department, hotel apartments. So these are some of the properties which can be financed to a certain level through a retail mortgage. But if it is a big commercial property, then it has to go through a corporate financing. If it is 300, 400 million, or maybe even more than, maybe even 30, 40 million dirham, then you have to go through a corporate banking. But if it's like within 5-10 million dirham, or 15 million dirham, normal office, you need a finance for that. The rates are typically higher, by 2 or 3% when it comes.
How much are the rates? We didn't cover actually how much are the rates for residential now, the average, and for commercial.
So the rates for a resident starts from as low as 3.7%. It raised from 3.7 to 4.5% for a resident. And when it comes to a for a commercial property, the rates are starting from somewhere around 6 to 8%.
6 to 8.
Yeah, the rates are higher.
Okay.
And for a non-resident, the rates you would find between 4.5% to 6% for a non-resident.
So guys, the very important question here is as well as to have an idea of people who were living here a couple of years. They were working, they had a school here, they had friends, they had a mortgage, and they have one apartment mortgage from the bank, but they decided to move out. So what is exactly the process or procedure or things they have to consider before doing so? If there is any specific things, maybe they just pack things and move out, and then they still paying it from the banks, or they have to consider something specific to be not in the trouble.
Yeah. See, when you have to move out, you can There is no issue with it. You can keep the mortgage. You can continue paying the installment. But the best advice would be, when you're moving out of the country, visit the bank, update your contact details. Inform them that you're moving out of the country, and these are the contact details. So in case the bank wants to reach you, so you are available, they want to maybe send you some communication, they want to call you, they want to discuss with you. But there is no such restriction of you, can't leave the country, or can't change the job. So you can just, keep the property here, keep the mortgage, pay on time. That's the basic advice. And yeah, but do inform the bank that you're moving out.
Also, the question is it really mandatory to keep your residency, like ID, and all be a resident? For example, some people, they were employed and their residency will be finished and cancelled by the companies, but they had a property here. What you would recommend to these people? Because I know that if for more than half a year or some period of, banks can block your account because you don't have any connections with the country. I mean, okay, you have a property, but for the bank, is it important to have residency, like physical residency, or not? What's the situation?
So when you take a mortgage, the bank opens a bank account for you here in the UAE. This is where they will take the monthly installment. When you move out, they will convert your account, which was a current account, they'll convert that into a saving account. So even if you don't have a Visa or Emirates ID, you can still have a bank account that's called a saving bank account, and you can continue paying the installment through the saving account. So it's just the account title that changes from current account to saving account, and this is where you will pay the installment from.
That's great advice. Guys, what I recommend you, for example, if you own the property and you were working for a company on the company visa, then and you decided to move out for some reasons different, but the current legislation allows you to get the visas different.
Yeah, based on the property, you can get a visa.
Starting
Golden
from
visa.
750,000, owning the property, it's basically a studio or one-bedroom apartment. You can have a visa for 2 years. For 2 years. And our company will be doing this for free if you purchase the property through our company from the developer or secondary market. That's absolutely fine. So we will take care about it and provide you. But if you have a property, let's say above 2 million dirhams, and you were working for someone, you can still have a visa for 10 years. Amazing. So you move out of the country. But however, before that, moving it, you just simply apply for the golden visa or for investor visa for 2 or 10 years, and then simply move out. Very secure. Then just inform the bank of your new residency, update details, and then very easy, very nice, I think.
Yeah, that's very easy, yeah. It's become very easy, these days, to buy a property and get a visa based on the property, especially the golden visa. That's basically, I think that's something which is really adding to the property market, to the real estate market, the golden visa. And anyone sitting outside invests here, buys a property of 2 million, even if he has got a mortgage on it, 2 million value of property, you can get a golden visa. So that's the best thing which you can get related to property.
Also, a little bit, I would like to dive a little bit about the rates from the banks, because there are, I think, 2 different rates. Like one is variable rate, and one is fixed.
Yeah.
And the banks usually provide 2 options. But how to choose? What's the best? Because it looks like they're trying to trick you out. I'm not sure, but you are the professional here. So tell us about that. How people, of course, you will provide them options, but what you recommend exactly, in general?
See, banks will never trick you out, to be honest. Yeah. So it's again, when you're dealing with an advisor, that's the responsibility of an advisor to give you what benefits. If you need a stability on your repayment, you choose a fixed rate. So you know that my rate is fixed for 3 or 5 or 2 years, and I'm going to pay this much installment, whether the IBOR, which is controlled by the central bank, whether it goes up or down, whatever happens in the economy, I still have to pay this much installment. So if you need something like that, you can go with a fixed rate. And especially when the variable rates are higher in the market, people prefer to go with a fixed rate, because banks from the last 3-4 years were giving lower fixed rate, competitive fixed rate, lower than the variable rate. So people were preferring to go with the fixed rate. Variable rate is something which 99% of my clients were not going with the variable rate from the past 3-4 years. because the variable rate was very high. I mean, if somebody wants to take a variable rate, I mean, 2 months ago, the rate might have got you at 5.7%, whereas a fixed rate
So 3.7?
Starts from 3.7 or 3.99 percentage. That's the rate under a fixed rate. So people prefer to go with. But now the rates are going down, and it is expected to go down. When you see the rates are going down, so when you know that the rates are going down, so people now start talking about variable rate. So I had a client yesterday, when we sent him a comparison, we were discussing with him. I gave him a fixed rate option, a variable rate option. So he was looking at a property of around 13 million dirham, so quite a good amount. So he was interested more towards a variable rate, because he knows the rates are going down, so he will get a benefit out of it, because the rate goes down, so immediately get a benefit. In a fixed rate, if the rate goes down, you can't get a benefit because your rate is locked for a certain period of time, so you can't get a benefit. And the margin on a variable rate offered by the banks are quite low as compared to the margin which is given on a fixed rate from the banks.
But I know that banks also giving, first they're giving you fixed rate for 2 years or 3 years, and then there's like a condition of switching to the variable rate. Is it correct? Or
Correct.
In most cases.
So in UAE, so you get a mortgage where you can lock your rate for a certain period of time, 2, 3, 5 years, or in some cases 7 years. But after that, it automatically becomes a variable rate. You have a bank margin plus the IBOR that gives you a total rate. But again, I mean, what clients who are doing these days, when their fixed period gets over, they go back to the bank and tell them that I want to refix it. So they renegotiate with them
Still
and they fix
possible.
it again. As per contract, bank is not liable to do that. But
Based on your experience.
based on my experience, a bank wants good client. They don't want to, lose a good client who's having a good repayment history, a good profile. Why they want to lose it? So they will refix that rate for you for another 2 or 3 years.
And I think that's the period when the clients would like to renegotiate or switch from one bank to another one. This because they know that, okay, after half a year, it will become variable, and they check the rate, this different. Oh, okay, I will be paying more. So I have to switch to a different bank maybe, because they're offering, again, 5 years fixed rate, and they maybe flip the property. So, and then they can get the profit on it and get another mortgage.
Yeah.
If I have one mortgage already in the bank and I want to buy another property, what is the rule here? What is the conditions here?
So let's say if you got one property already a mortgage at 80%.
At 80%, exactly.
Yeah. So you want to get a second property, you can get 60% from second mortgage onwards.
Okay.
But that can be increased to 80% if your first mortgage property value has gone up. The first property has gone up, and your outstanding on the first property, the mortgage outstanding has come below 60% based on the current market
So
value.
that's very important.
So you can get up to 80% on the second property.
That's very good.
So, but that first property needs to be appreciated. So a lot of clients who bought a property, got a mortgage through me and bought a property back in 2021, 2022. So the property prices in some areas has gone up by more than 100%.
Exactly.
So those clients are coming again. They basically reevaluate that property, get the revaluation done from that bank, and they can surely see that it's now below 60% of the outstanding is below 60% of the property value. So the bank gives 80% on the second mortgage.
I actually didn't know about that. I know that the bank's giving a 60% maximum loan to value on the second property, but I didn't know that they will still consider if the property value increased and basically the mortgage is, of course, decreased in total loan to value on the first property, then you're eligible for bigger loan to value on second property.
Correct.
Wow, that's cool.
Yeah, keep in mind the property value is within 5 million.
Of course,
If it goes above 5 million, then the maximum finance you can get is 70% as an expat in the UAE.
Is there any maximum number of property you can mortgage or not?
There is no, as long as you are eligible. So there are 14 plus banks. So maybe if one bank has got a quota of that, okay, we can do 3 or 4 properties for you under a residential rate, and if you go beyond that, we'll do a commercial rate for you. So then you have n number of other banks. You can choose another bank and get it. So as long as your income is sufficient, you can get n number of mortgages, n number of properties.
Good, very good. And maybe the last question we have on our podcast studio, and I would like to ask you, should people consider the mortgage or not? In case I have money, let's say, still, and what would you recommend them? Consider this, or not? What's your advice? Because many people, they have money, but they think, look, why should I use my own money? Maybe I can mortgage it, or maybe I don't need it. They don't really know. And your experience in this, and then what's your advice on that? So should they call you and ask, look, I need a mortgage. Tell me, what can I do maximum here?
So I'll give you an example. So let's say if you have $1 million, okay, and from 1 million dirham you've seen a property of $1 million, you go like the property, you pay cash, you got only one property. The other option is you can build a portfolio with that million using a mortgage. So with 1 million, you get a first mortgage, you get 800,000 mortgage loan, 200,000 is a down payment, which is 20% you pay. So you pay 200,000 plus you pay, let's say 100,000 on top of that from renovation, land department fees, real estate commissions and all those things. Let's keep it 300,000. So you bought a property of $1 million, you spend 300,000 from your own saving, you're left with 700,000. Then you buy another property of $1 million. When you buy another property of $1 million, you need to pay 40% down payment, plus land department fees, real estate commissions, and all those things. So that comes to be around, let's say, 100,000. So you get 500,000 paid from your side, and 600,000 is the loan you get. So now you have got two properties. You have paid 500,000 on the second one, 300,000 on the first one. So you have paid only 800,000. You're still left with 200,000 with you. So with 1 million dirham or less than 1 million dirham, 800,000, you build two properties. So that properties, you can rent it out.
And you can generate, let's say, even 8%. Let's say 8% minus 3.7, okay, 4% from bank. 4% will come to your pocket every month. Plus, I mean...
that can cover your installment.
And your property
it
will be also appreciated in value, which will give you, let's say, 10% annually on appreciation, plus 4% on each of the rentals.
Yeah.
In total, comparing, if you will keep just this million and buy one property, you will generate, let's say, 8%. In this way, you will generate, let's say, almost 15% minimum in terms of capitalization of your property, plus income from rents. And most of these properties you will purchase with the borrowing money from the bank.
Yeah. And in good thing about UAE is that you don't get taxed on those rental incomes. You don't get taxed on capital appreciation. So I've got clients.
I love Dubai, guys. I love Dubai. This is amazing. No tax on that.
Yeah, so it's like zero tax. I mean, I've seen clients who got properties from me at 8 million dirham that appreciated to 15 million dirham.
Exactly.
So he did a bit of renovation. He was smart enough. He did renovation and got it to, 15 million dirham. So he sold the property. And there was a zero tax on the capital appreciation he made.
Unbelievable.
And if you rent those properties, you don't pay tax. So
exactly.
Where in the world you will find this?
It's never anywhere in the world.
Yeah.
Only in Dubai, guys. In Dubai, this is the super amazing location to be and enjoy and just gain and make some money. I mean, it's really crazy. So Fahad, we have also one question from our customer here. He's asking about what is the exact process of getting the mortgage? What kind of steps, the procedures, the period of time? You said it's 2 days, sometimes more maybe, but what is the exact process?
See, I would suggest any client who wants to buy a property, before they even go into the market and look for the property, they should basically talk to a bank or a mortgage consultant and get a pre-approval first if you're buying a property through a bank finance. Because if you don't have a pre-approval, you go into the market, that's the first step. If you go into the market and you want to buy a property, the seller will not be interested in you because you don't have a pre-approval.
Everybody's asking actually, do you have a pre-approved client or not? It's the first question.
First question. And this is seller's market now. I mean, there is one property and there are 10 customers waiting for it to buy that property. So if you tell them that you are going to get pre-approved and you will do, and you're confident you will get, but please get that pre-approved first. That's the first step.
How long it takes to get the pre-approval?
So pre-approval, see, it can be done as quick as 2 days, and in some cases I've got it done in 1 day as well. But 2 days you can get a pre-approval, but in some cases it might go longer depending on client profile and the structure of the case.
And what documents for that required? Exactly for pre-approval?
So exactly for a pre-approval, it's very basic. Like if you're a salaried, you just need to give your ID copies, your salary letter, bank statement, pay slips. These are some of the documents, and a filled application form. That's it. That will help us to get a pre-approval from a bank. That's the documents which we need. That's step 1 is pre-approval, simple. Second step is you talk to a good real estate agent. Always work with reliable, good real estate agent like Mr. Dimitri. So they know the business. I mean, you know that this guy is going to help you. This guy is not there to sell you. He's there to advise you. So work with somebody who is really experienced, who knows the market, who can get you what you are looking for, not what he wants to sell.
Exactly.
So you can work with Dimitri, and he is the right guy to help you out in terms of getting the property. That's the second step. You talk to them, and that person will get you a property of your choice. Once you sign the agreement with the seller, you give those property documents to the advisor, to the mortgage consultant. That gets the bank valuation done. So that's the step third, which gets you the property valuation from the bank. After the valuation, you get the final offer letter. You sign the final offer letter and inform the seller that you have got the funds ready, you have the final offer letter ready. We can get the final transfer done in the trustee office or the lands department authority. So you go there and get the property transferred, and you become the owner of the property. That's a simple process, and it can't get easier than that.
Any extra documents to the pre-approval you have to submit when the bank approves it? So, for example, you submit all the IDs, pay slips, bank statements, passport copies, I don't know, anything else. And then, is there any extra documents the bank will ask when they're approving finally, when you already had the property in your mind and you're saying, I want this property to you actually, please get the final approval from the bank. What do you ask client?
When the bank has already done your case as a pre-approved, they normally don't ask any additional documents. They might ask you for an updated salary letter, the latest one, or updated payslip, or an updated bank statement. Or if they find something which has changed, drastically in your scenario, then they might ask. They have the right to ask any documents. But if they have done pre-approval, in most of the cases, they don't ask for any extra documents.
Okay, so it's quite simple, I would say. Yeah.
Quite simple, yeah.
But just client have to go, and you will advise every time when you have any questions from bank, you communicate to the client, and easy, just trying to solve things.
Yeah. So as a mortgage consultant or as a good mortgage consultant, you should be there for the client. From the day he has not even chosen a property till he becomes the owner of the property. So you basically handles the transaction smoothly. You take all the stress out from the client and make it more easier, simpler, smoother.
Exactly.
And working with somebody really experienced can definitely make the experience great.
So you're not just a good advisor, you're a professional with 15 years of experience working for the big financial institutions. So what will be your advice to customers based on all this knowledge, all this experience? What is the advice you can give us to our customers, to everybody, just as being so long on the market?
So, there can be a lot of advices given from a mortgage or a financial perspective. So, there are very few basic things. Whenever you take any facility from a bank, any product, whether it's credit card, whether it's personal loan, auto loan, or even if a small utility bill or a telecommunication bill, that is now reflecting on your credit bureau. Pay on time. If you don't pay on time, even a small utility bill reflects that you have not paid on time. That does not look good on the bureau. That does not give comfortable to the underwriters. That such a small bill of 200, 300 dirham or 500 dirham is, he's not paying on time. That means he might not be, serious about paying on time. So please pay on time. That's the basic advice I would give. Second is whether you are buying a property going directly to the bank or getting it through a mortgage consultant, get a pre-approval first. That will help you to budget your purchase. That will save your time. That will save agents' time, sellers' time. And pre-approval is important when getting into a mortgage purchase.
Yeah, thank you so much. Thank you. That's really valuable, guys. And it's especially a thing just go ahead with pre-approval. Plan your financial, it's obligation, so be really conscious, plan. And in this case, the advisors always can help you with that. Yeah, structure, advise on different banks and rates and etc. So that's important. Thank you.
Thank you.
Okay, and guys, also we have a special gift for our guest, for Fahad. We have a really cool rush hour bag with the tea. It's a rush hour tea. It's rush hour berry tea. Yeah, that's a special for our guests exclusively. Yeah. So thank you so much for coming
Thank
to
you
the
so
studio.
much, yeah.
Thank you so much. Yeah,
Thank
that's a
you.
pleasure.
It was pleasure mine as well to meet you. It's always pleasure whenever we meet. Yeah.
Thank you.
Thank you.